prices spiking, as we saw after the Americans said they shut down that drone. The big topic on the mind of many oil investors right now, talks between Washington and Tehran. Our guest says disruption risks may persist if these talks don't produce swift results. And he also says the mood in the oil market may be set to change, and people could start moving towards buying the dip instead of selling rallies. Let's get more from Jeremy Irwin, Global Crude Lead at Energy Aspects. Jeremy, great to see you. Thanks very much indeed.
Yeah, thanks for having me, Andy.
I guess one factor here with the U.S. and Iran, the Americans would not be presumably happy to see the oil price globally shoot up because the Iranian supply was cut off.
Yeah, absolutely. I mean, the U.S. administration has made a lot of efforts to keep energy and oil prices low, largely to mitigate any type of energy-induced inflation surge.
So, and they've been careful to not attack Iranian export terminals and Iranian production facilities. Is Iran a big issue right now for the energy market? Is it a huge driver of prices?
I think it's a massive supply risk. Even though we would classify it as a tail risk, we don't think it's probable that you're going to see large disruptions in the Strait of Hormuz. And should there be disruptions, we would think they would be resolved quickly. But it certainly has the market's attention just with the quantity of crude that flows through that strait every day.
Can we switch to Russia? Russia did become a huge supplier to India after its attack on Ukraine, but some of that crude has started moving towards China. I think we have a chart pointing to that. Is that an important trend?
Yeah, I think it is an important trend, especially for global oil flows. What we've seen is pressure from the ongoing trade negotiations between US and India translate to India applying some political pressure for their refineries to trim down on their purchases of Russian crude. Separately, we've also seen the EU close the refining loophole, which was effectively allowing discounted Russian crude to come to India, and then that be turned into refined products that was selling into the European market. So this has a trickle-down effect into product flows, crude flows, and we think India will continue to lighten up on their Russian crude purchases. We just don't believe it's going to zero, as some of the headlines may suggest.
It's interesting. And we're looking at Russian crude at sea, and of course we've seen vast amounts of Russian oil sitting on tankers on the ocean. We in Canada are apparently prepared to start bringing in refined petroleum products from India. Do they have they built a gigantic refining sector?
They do have a sizable refining sector, especially on the west coast of India, and they're actually adding more capacity in the latter half of this year. So they are an important global refining hub, and they're largely an import market. So they have the attention of a lot of oil-producing nations.
We hear a lot about this possible glut in oil markets, but you say the numbers have not yet revealed, or have not yet confirmed that. And so what if they don't? What if this glut turns out to be illusory or at least exaggerated?
Yeah, well, I think, look, if you don't get global crude stocks building like a lot of the forward-looking balances have projected, you're going to see price appreciate in oil. That would kind of be the high-level take. Now, it's to be seen the extent that these builds continue to come in short of expectations. But we really haven't seen any glut form at any of the global benchmark hubs yet. It's largely been focused on sanctioned oil, oil on water, and a lot of that has built in the East.
But you say we could see this in the March-April timeframe, this emergence of a surplus?
Yeah, look, we see some weakness coming for the Atlantic basin, but that's by and large the effect of seasonal refinery turnarounds. And we're expecting some of the exports that have been disrupted out of Kazakhstan, which feed a lot of the Mediterranean refineries, to be resolved. So you have supply coming back to the market. At the same time, you're losing some refining demand, which causes a temporary or a seasonal glut in the Atlantic basin but we don't see this as a structural glut forming, or there's no evidence that that will be the case in the Atlantic Basin yet.
And just finally, you say that the mantra among oil traders for the past while, and oil has suffered now for almost 4 years, has been sell into rallies. But you think it could turn into buy the dips?
I think we're starting to turn that corner, especially with some of the additional capacity from the refining sector we see in the back half of this year, and just global crude growth in terms of outright production gains starting to slow, as that 4 years of kind of more or less punitive pricing translates to lower capital spend in the upstream sector. So we do think we're starting to turn the corner, and we do think, global oil fundamentals are starting to firm. But we probably have another weak quarter or a quarter of headwinds to get through before we think we're off to the races.
Jeremy, thank you very much. Jeremy Irwin, Global Crude Lead at Energy Aspects.